Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 7th of March 2020 and we're publishing our gold and silver weekly update for the weekend in the 6th of March. Now this past week we have published a daily update of the markets as each day we witnessed a number of significant movements, especially with equities and for a brief period the precious metal markets too. Now, whilst today we're providing a weekly update, we would particularly draw your attention to the video we published on Thursday entitled Shares Fall Again as Gold and Silver Prices Rise, which basically sums up what has proven typical this past week. So let's take a look at the figures. Gold rose $88 last week, from $1,586 to $1,674, having hit a high of $1,691 and a low of $1,575. In sterling terms, gold finished the week at £1,282, that's up £45. And in euros it closed at €1,483, that's up €45. Silver rose 67 cents, from $16.67 to $17.34, having hit a high of $17.57 and a low of $16.45. In sterling terms, it closed at £13.29, that's up 29 pence. And in euros, it closed at 15.36 euros, that's up 0.25 euros. The gold to silver ratio rose again from 95.1 to 1 to 96.5 to 1. The Dow Jones closed on Friday at 25,864, down 256 points on the day but up 455 points on the week. The Nasdaq closed at 8,575. Down 162 points on the day, but up 8 points on the week. And the S&P 500 closed at 2,972, down 51 points on the day, but up 18 points on the week. Now many people will wonder, how come the markets rose for the week when almost every day it appeared to be going down? Well, that's because of a major recovery early in the week after the Dow's 3,500 plus fall last week. And then, since that slight recovery, a descent the following days. Brent crude closed at $45.27, down $4.40 on the week, following the previous week's near fall of $9. And WTI crude closed at $41.28, that's down $3.48 on the week. The dollar index stands at 95.95, that's down 2.18 for the week, following the previous week's fall of 1.13. So what an incredible week we've really witnessed. A 3,500 plus point fall on the Dow a week ago, yesterday, then a modest recovery and then continuing declines. The dollar was faring well until the Fed lowered rates by 0.5% on Tuesday, unexpectedly, though we did have a notion on Monday, which is why we published the video on Monday. Gold and silver rise, a surprise rate cut may be announced this week. Now this cut accelerated the dollar decline, even though most of the G7 have agreed to cut rates too. They haven't done so as yet. We are expecting the ECB to cut rates further this coming week, Thursday the 12th of March, and the Bank of England similarly on the 26th of March. Between those times, the Fed's FOMC meets and then reports on the 18th of March. We were expecting the dollar index to recover a little, providing, of course, the Fed doesn't lower rates again on the 18th. But the market noise at present is that it will do so, and possibly by as much as 50 basis points. If this does happen, then we shall see the dollar moving even lower, and this will prove most positive for gold. Apart from the initial opening this week, gold more or less rose all week, in US dollar terms that is, closing only $17 off its weekly high. There is no doubt in our mind that it will hit 1700, and relatively soon. Quite likely this coming week. Its rise of 5.5% for the week, while not startling, is very comforting for us gold bugs and supports the view that there is a slow but increasing investment in the precious metal once again. Watch the 10-year bond yields, as they have fallen to as low as 0.65 basis points, and this has some significance, suggesting that there could be a further interest rate cut ahead. Now, gold closed on Friday at a 7-year closing high, and from a technical point of view, support is seen near the 10-week moving average of 1590, with a 50-day moving average at 1579 providing additional support. Medium-term momentum is positive, and the MACD has generated a crossover buy signal. Silver rose a little over 4% for the week, more or less following gold's trajectory, but a little more bumpily, if there is such a word, closing just 23 cents off its week's high. Seeing silver rise above $17 was no surprise, and it gravitating to our long vaulted fair value level of $17.50 certainly seems to be the point at which silver is most comfortable. There is no doubt, however, that silver's underperformance compared with gold is the result of the likely to be affected industrial demand for the metal, and therefore this divergence in price, the gold to silver ratio, will continue for some time yet. Only when markets eventually get back to normal, or should gold become overwhelmingly expensive, will we see this gap reduce. And that's when individuals start to regard silver as a bargain. And by individuals, I mean investors. Christopher Lewis, a precious metal analyst from FX Empire, Foreign Exchange Empire, encapsulated our views wonderfully this week with the following comment, quote, "If you are going to trade precious metals based upon central bank actions, you are probably better off trading gold, as it seems to have quite a bit more momentum. That being said, if the precious metal sell-off, silver is going to be where you want to go short. I fully appreciate that we continue to grind back and forth with an upward slant, though." Unquote. Now, from a technical point of view, the downside area for concern for silver is $16, and if silver does actually hit that level, then the algorithms kick in and silver will fall quite considerably. The general consensus, though, is that prices will continue to rise, but much less than gold. And so $18 silver should not prove surprising, and an attempt at some stage in the future to reach 19 is a possibility in time. But there will be considerable resistance at the 1875 level. And all of this will only happen if the economic situation worsens, which we have to admit is quite possible. Unless one believes, of course, that the considerable loosening of credit, cutting of interest rates, will stave off a US and global recession. But one does need a lot of persuading. Now, talking of recession, the US data published last week was quite interesting. Manufacturing data was in line with expectations and similar to the previous month's reports, while non-manufacturing data was higher than previous. Quarter 4 productivity was down 0.1% below forecast at a positive 1.2%, and factory orders for January were down 0.5%. However, the non-farm payrolls report was most encouraging, at 273,000 new jobs against expectations of 165,000, and normally this would send the dollar soaring. The unemployment rate and average hourly earnings remain constant. The trade deficit was minus 45.3 billion for January, 0.6 billion less than expectations. So, with this in mind, let's take a look at the US data being announced this coming week. Well, on Monday, there's nothing really scheduled. Tuesday, just the NFIB Small Business Index. Wednesday, Consumer Price Index for February, Core CPI for February, and the federal budget for February. And on Thursday, we have the Producer Price Index for February and the financial accounts for the United States for quarter 4. And then on Friday, Import Price Index for February and the Consumer Sentiment Index for March. So a spread of data, with perhaps Wednesday and Thursday being the most important. Now, what are our expectations for next week? Well, probably more of the same, to be fair. We can see gold prices rising modestly and silver being a couple of % behind it. We all know what's having the major impact on markets at the moment, which is a shame as the world economies were beginning to show positive momentum. What perhaps is concerning, though, is that some economists are now estimating that world trade could be affected and reduced by a couple $1 trillion this year. And if this comes to pass, then we shall see gold reach the peaks we forecast in our gold forecast for 2020. And similarly, potentially for silver too. In the meantime, do follow our Richard and Greg channel, as well as this one. Please not forgetting to subscribe to each and pressing the bell sign so that you're notified of new videos as and when they are published. Meanwhile, we trust and hope that you have an enjoyable weekend and a most prosperous week ahead. We shall certainly be watching the gold and silver markets very closely indeed. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.